Hello and welcome to PGurus channel. I'm your host Sri Iyer. Today I have a very special guest. By the way, Happy New Year to all our viewers. New year, new beginnings, and a new guest on PGurus channel. Today we have with us Sri R. Balakrishnan. Mr. Balakrishnan is an independent consultant and has been in business and finance for over 3 decades. He was one of the founding team members of CRISIL, CRISIL, and also helped set up Malaysia's first credit rating agency. He was the head of equity research at DSP Merrill Lynch. He has been an investment manager in global markets for a brief period. He has also been associated with an equity research from its early days in the country. He writes for Money Life and periodic columns for Deccan Chronicle. And I must mention that he wrote one piece so far for P Gurus. And I think I've been bugging him for a while. He couldn't say no. So he said finally, okay, I'll sit down and we'll have a discussion or a chat. Today, we are going to talk with Sri R. Balakrishnan on various things about the stock market of India, the banking, and so on. Welcome to PGurus channel, Bala.
Thank you, Sri. Happy New Year to everyone. And I think you've been very warm in your introduction. I also feel, oh, have I done so much? No, thanks. I have been an observer of the markets for years. So, and I've been like known to be a bear rather than a bull because when people think they are bearish, they don't like to buy. I like to buy. So it kind of becomes opposite moves.
Well, I think you are following what Warren Buffett says: be fearful when others are greedy, and be greedy when others are fearful. And to have that mindset, then you have to have a very solid grasp of the fundamentals of the market, of which stocks are oversold, and so on and so forth. So I think that's very good advice. So how do you see the stock market for 2019? I'm talking about India.
Well, I think I look at the markets not as it was broken by the change of the calendar. I think it is a continuation of what is happening. So if you look at the valuations, at one level they seem like they are where they were about 10 years ago at the peak, like whatever, 22 times, 23 times earnings. But to me, the disturbing factor in the large companies is that over 10 years, their capital allocation has gone very bad, which means that the return on equity has virtually dropped by 40 to 50% from where they were. So which means that the market at the big level stocks, the index seems to be rather expensive. And in the mid-cap space, we had a jolly good run in last year, thanks to China and the commodity cycle, which I think kind of peaked out last year, but people are still anchored to prices which they saw as highs last year. So I think that people are going to be in for a bit of a disappointment this year. This year, I think there is a lot of excitement also because like every 5 years we have our elections, and every time there is some trouble, some talk of changing or not changing or continuity. And I think fears will start coming in as the days come closer. So I think it is good to keep a lot of money handy. I think there will be good times to buy in this kind of a panic. And I think only thing I have seen is in this 2 year, even if you have seen the correction in the last 4 months, high quality stocks have not come off in price. So I think there is definitely not many buying opportunities unless you are a trader.
Now, how much of an effect has systematic investment plans (SIPs) had on the overall stock market?
Well, I look at the numbers and I feel very happy that a lot of retail money is coming into the stock markets and thinking beyond a trade, that they like to create an investment pool or a savings pool rather than just buy what the next door neighbor says, which is a good sign. And I think they have provided a lot of stability to the markets in the sense. See, our market is not very, it has a lot of number of stocks, but you don't have depth or breadth in high quality stocks. So what happens is all this money tends to kind of flood into large cap stocks rather than mid-cap stocks or across the trade. So which gives a kind of a feeling that the markets are all right. If you look at the index, I think they are not they have not been too much of a change year to year. But if you take individual stocks across the mid-cap space, we had losses ranging from 20% to 80%. Okay, and we had some nice corporate governance shocks. Sometimes I think this kind of frauds which get discovered. I think we know there are frauds, but discovery is the one which triggers the panic.
So
So,
please
uh,
continue. Please continue. Please continue.
so I think this kind of shocks, I think this year will be probably less than last year because I think the auditors have had a tough time completing the audits for the last year. I know for a fact. So I think kind of the absolute rogues have been kind of put on a hold, but I think I, I don't rule out more surprises, but not of the magnitude we saw last year.
Now, let's hone in on the state of banking in India, and the special sector that I would like to kind of hone in on is the banking sector. In March of this year, I'm still in 2018, by the way. March of this year, ICICI came out. Then there was PNB in the early part of the year. So, how does the banking sector as a whole look?
Well, I think like most other people, I would like to divide the banking sector into two. One is but on the basis of promoters, I would say one is the government-owned banks and the private sector banks. I think the private sector banks are still continuing to show good health. So while there is not much of an upside left, I think the high quality banks like an HDFC or a Kotak still seem to maintain good health and they continue to be favored ones. As far as the others goes, you have the half-breed banks like ICICI or Axis Bank, which are neither private nor public, so have become fiefdoms of a group of professionals. I think those banks, I think, are still in kind of intensive care. I would say that there is a kind of a decision freeze, and they will continue to look attractive. It's like the whole public sector has been into a Alcoholics Anonymous for about 3 years and now coming out. So now there is always hope, saying that you won't go on the wagon again, go off the wagon again. So
So,
I think it will attract money, the public sector banks, saying that the work is over. And I think today there is an RBI statistic saying that the total non-performing assets have come down after 4 years by half a percentage, which will be interpreted as bullish and some money flows will happen
um, now, let's take another segment that is perhaps a part private, part public, that is IL and FS. There has been some churn, but somehow I feel like a lid has been put on top. I'm not really sure of the gravity of the problem there. What can you tell us about IL and FS?
there. Well, I think IL&FS, seems to be a lot of political pressure to keep the lid from blowing off because a lot of high profile names seems to be involved who actually like that the saying goes like you put your hand in the jaggery pot, you don't shake off the hand. Like in Tamil, Vellapana like I put it, it's virtually like so a lot of people have enjoyed the benefits of misgovernance and misdeeds at ILFS. So I think the government is slowly but surely on the way to bail out ILFS in some form or the other. That's what I can see. The logical thing would have been to bust the company. But the step seems to be not happening. The board is still roaming free. I think by now, if the government was serious about punishing white collar fraud, they should have, like anticipatory bail, they should have been anticipatory jail for the board. So, and then because they are right now roaming around fixing things and fixing contacts, and I don't see too much happening there.
That is one big bane in India right now, that action takes place after the horses have bolted the farm. And this comes back to bite you. It's just that It's one of those slow motion things where the people don't realize it, but in a way, everybody is paying for these mistakes. And to talk a little bit more about this context, I want to draw Bala your attention to the value of rupee today. I think it is hovering around 70 rupees. Now, I had made a strong case that last year, beginning of last year, it was at 63, and crude was around, I think, 80. No, no, not 80. Yeah,
Around that.
yeah. And then now, this is Brent crude, by the way. Crude is now touching 55, and yet the rupee, which went from 63 to 75, has come back a little bit. It is at 70, but somehow it is facing resistance there. Now, the things that I am having difficulty understanding is India is the fastest growing country. It has had record exports, which is what actually determines the value of a currency. Because if you are exporting more than you were exporting before, that means you should be doing something right. Therefore, your currency should appreciate. But I see that it still has to regain about 10% of its value. Now, just for viewers' benefit, in 2016, I had written an article about how the value of rupee should be around 30 rupees to a dollar. And Bala wrote the op-ed on that, and he had said that no, that is not true. That's not how it works. So I'm again posing you the same question, Bala. In my opinion, today the rupee should be around 63 or perhaps even 60 to a dollar. I mean, India is number three by PPP. That means you have a huge mass, and I don't see that upward momentum in terms of the valuation of the rupee. What are your thoughts, sir?
Well, I think, see, neither of us are experts to the level of market flows. What I can see is inflation differential. Okay, probably this year is virtually not there because I think prices are more or less held. So there is no reason for the rupee to fall except backed by flow of foreign exchange, which means that our deficits are not still under control, one, and the outflows on the portfolio money have kind of happened together, and the RBI did not step in to support the rupee. I think they are given it to the exporters lobby saying that let the rupee weaken a bit. And I think in India, instead of a gradual fall, suddenly for 2 years everything looks all right, and then one spike comes where you lose 10, 15% in one go. So I think that is what has happened.
Now, why do they keep doing this? Because I still feel like the Babus in the finance ministry, especially, have a very socialist mindset that they want the rupee to always keep weakening. My simple calculation is when the rupee starts weakening, that value starts finding it, you're paying more in terms of whether it is oil, direct costs, indirect costs, and so on and so forth. So why do they let this happen?
No, I think they are taking the easy way out. I always tell people, I said, you look at a country like Japan, where the yen used to be like, you had 125, 250 yen to the dollar in the 80s and 90s. And then now it is at less than half of that. The Japanese economy is done better. A stronger currency shows a stronger country. I think the day our politicians and the economists they at the helm understand that, I think we will be better off. Right now, we are importing inflation by keeping the rupee high. And the second thing is we don't have a strategy to attract manufacturing. I think that has been the biggest stumbling block to me as far as I am concerned. Because unless China maintained its currency, even if you say artificial, you can only maintain it to up to so much level. They did that by tremendous policies which brought manufacturing and made them exporters big time. So here we don't have that trade deficits continue. We are saved because of the service exports and the remittances which come. Even then, we run short by 2-3% each year.
Speaking of remittances, one of the things that I hear almost always when I talk to people in the United States about investing in India, to a person, what they say is, putting money in India is easy, but taking it out is extremely difficult. What with litigation and just the way it's being done, they just feel that it is very, very difficult to invest in India as a currency, where I can put the money into a bank and say, okay, US gives me 0.25, 0.5% interest, and India gives 6%. Let me try to see if I can take advantage of an arbitrage between these two levels. And invariably, what happens is the the way Indian banks treat this, they convert the dollar back to rupees on the day you put the dollars in, and then the rupee starts growing, and they give you like 6%, 7%. But the problem is, if the rupee keeps weakening, the whatever percentage of interest you are getting, differential, that gets diluted by the percentage by which the rupee weakens. For example, in one shot, it's lost 10% of its value, probably even more. But so, it takes years to recoup that kind of stuff. So when the government realized that there is this million plus, non-resident Indians all over the world who would be happy to invest in Indian markets, just simple fixed deposit where they can be assured that they can get 5 to 6%. I mean, that itself, I don't see that happening, and I don't know why banks don't see that as an opportunity.
I don't know. So we have these FCNR deposits which were brought in. I think you don't find that attractive enough.
Right,
Because
right,
the
right.
rates are one and that is where your dollar is protected. Now, in case when you come into the rupee arena, you are doing two things. You are not charged exchange conversion cost also, because you come in with your dollars on day zero, and when you go out again, I have to convert it back. That
Yes,
is not being charged either. So if
right.
you were to logically think that these are the activities involved, and there is a risk of inflation and political reasons why the rupee keeps depreciating. So you would rather, because the mind still gets anchored saying, oh my God, in money market funds, I'm getting 0.5% or 1%. I don't want, I can, India, we are used to seeing the Sundaram Finance 14% of the 60s and 70s. So mind goes there. So I have seen people, if they do their calculations that what money they put in dollars in 1980, probably they got a real return of less than 2% today.
Yes, yes. It's horrible.
So
It's horrible.
So I think the better way is to make a pool of money and come into venture capital. I think that is what probably will attract people in India.
Well, venture capital is also, beehive's nest because, you have to do some, what I would, not illegal, but borderline ethical stuff. Meaning, like, you have to establish a company in Mauritius. You have to put the money through the Mauritius company. Then the money comes into India. You can probably play the stock market with it, and then because it's a Mauritius-based company, the capital gains are not taxed. Although that's going away soon, so even that route is being closed.
So that brings me back to an interesting option for you. See, I presume the money you have is wealth, which means that you are not dependent on that dollars for your day-to-day living, right?
Probably, yes.
Probably. Yes. So why don't you put that money into ETFs on Indian paper, on the Indian stock market? It gives you 12, 13% without worrying. It is much better than the bank deposits.
Okay.
You put it into ETF on the Nifty or the Sensex, you get your 12, 13% over the next 10-year period. Even if depreciation were to be 5% per year on the dollar, you're still getting a real return of 6 to 7%, which is better than probably what your Dow would give you.
Bala, I have to check that because RBI for the longest time would only allow limited investment into stocks. Maybe ETFs it allows. Is it ETFs are open for everybody?
I am not aware, but I think there should be a way to come
Okay.
into this. There are FIA routes which allow you to come in also. So that means if there is an FIA of Merrill or Merrill Floor, so you can be an investor in that fund.
Hmm.
I'm sure if there is enough demand, Merrill or Goldman would launch a fund for that at a very, or a Vanguard, I think the ideal one.
Hmm. So just to set the bar, Bala, today there are equities in the United States that give you a relatively risk, not risk free, they're relatively less risky 12% in United States. There are
in
uh, uh,
dollars.
in dollars stocks available. Now, the way that is happening is that, in US you can get green card if you invest in what is called as EB category. And EB5, if you put in $1 million and then promise to employ 10 people for a period of, I think, 4 years or 5 years,
You get it.
then you
Yeah.
get a green card in three years or something like that. So a lot of money has come in to real estate in US. If you take a look at big cities, San Francisco, San Jose, Seattle, I kind of went up and down the West Coast, and I saw a lot of buildings where almost all of that seems to have been financed by foreign nationals who are willing, hoping to come into the United States on this EB5 visa. Now, the the real estate market today seems undersold, but it is very, very fast reaching oversold. In US, the balance is it happens very quickly. It's a real supply demand, not like in Mumbai where 39 months go before a flat gets sold, which is incredible that somebody would sit on an inventory for three and a quarter years. That's mind-boggling.
I know of a project in Chennai where the builder is sitting on it for about 11 years now.
He has completely built the house.
He's built the entire building with about 2,000 flats. Only about 1,000 have been sold and 1,000 have been vacant since day one.
And they don't want to lower the price.
They don't want to lower the price. He's been funded well. Politicians and everybody is.
See, the reigning wisdom in India and most tropical countries, so let's not just say India alone, is one monsoon, it will show up all the cracks in the building. So from that point forward, it's not going to look great unless you keep,
See, I have been always against real estate as an investment. It is more of an emotional blanket for people because people don't take a spreadsheet and take the daily NAV. And even if you were to buy a plot somewhere, you say, forget the neighborhood value, mine is a corner plot, mine is a master plot. And they will be happy with it. They know that plot is there is no corporate governance issue. They sleep well. So, peace to them. But if you do your Excel sheet, you don't want to put money into real estate. I do not know about the US, I don't understand it, but if you are getting the 11-12% there, I would put some money definitely there rather than bring it to India.
Yeah, I mean there is taxation, but you can avoid taxation in the United States if you invest your IRA, that is individual retirement account, from your individual retirement accounts. If you invest through that, then what happens is the interest, or even if you compound it by just buying stock on the dividend, all that doesn't get taxed today. It gets deferred up until you take it out in one shot. You can pay the interest when you retire, when your annual income might be much less, and then you get taxed at that income. Therefore, you can take the benefit of that. So this 12% that I mentioned about is pretty clean 12% return. So my question to you, Bala, is supposing somebody wants to buy a decent flat, let's say, what is it, 3 BHK, 3 bedroom, hall, kitchen, and two bath kind of flat. And person is looking pan India. Which would be the best city?
Best city?
Yes.
See, in any of these metro cities, you buy a flat in the heart of that city.
Okay.
Not in the outlying suburbs or a new area which is coming up. Like in Madras, you want to buy it in Mylapore. In Bombay, you want to buy it in Burli or Dadar, any of these places which will always get you fantastic rental incomes and the demand is always there. So not you because it is Mylapore is, let's say, 20,000 rupees a square foot. You have something coming up at 3,000 rupees a square foot on GST road. You buy that, after 10 years it still will be 3,000 rupees. And you are paying outgoing, you are paying your taxes, there's no point. Buy it in Mylapore. So where the place is saturated, where there is no fresh supply coming up, that's the place where you should put your money.
This kind of advice nobody has given on PGurus channel yet, so I'm sure viewers are going to find it very interesting. And I have a feeling that we're going to come back to you, Bala, for more such advice, maybe periodically. But before we end this hangout, I want one question answered from you, Bala. You've seen many RBI governors come and go. What is the sanctity of this appointment? I mean, you had big shots come in, and now you have a Pakka Babu back again. How do you see this? Does it make a big difference?
I don't think so. I think the RBI has always been subservient to the government. There may be small things that the government has never bothered about. Now the government is asking questions, it becomes an issue with the right-wing liberals. That's what I would say. Because nobody knows what is the, even if those reserves were to be given away, what would be the impact? Neither of us has an idea, nor does the world have. But only thing, you can point a finger and say, oh my God, he's robbing the Reserve Bank. In principle, I am against using a family silver to meet your daily expenses. It's not good bookkeeping.
That's absolutely true. However, again, there have been position papers which said that India is being overly conservative with its money being kept at the RBI. I think it's okay. We are not going to be able to decide this or even set anybody's mind on it. But assuming that the money is going to be taken out, 3 lakh crores, I'm just giving you a number. How would you use that? How would you as a bank, as a government, how would you use that?
I would build infrastructure. I would build solid infrastructure which no private party wants to do that and which will give benefit. Let's say use it for post-harvest facilities to the farm sector in 5 states, 10 states. Because today the farmer's losses after harvesting is what is hitting him. He is able to grow the crop. He is not able to get the price. He is not able to transport it. He is not able to preserve it. So maybe that would be an example. Or I would build any infrastructure, but which will be long-lasting. And in the old days, I used to do something called the World Bank used to do something called a socio-economic cost-benefit analysis. If you look at those kind of analysis on projects, that's where I would use that money.
Very, very, very sound advice. And also, I should mention to viewers that any infrastructural investment is not seen as a burden on the rupee because it starts paying itself over the years, and therefore the rupee as a value on its value will not suffer any depreciation because of that. And let's hope that something substantive comes out of it. And I'm afraid that it should not be like the government announces that farm loan waivers for across the country. Because remember that when Madhya Pradesh or Karnataka or any state, when they say farmer loans are waived, the only loans that are waived are those that are being controlled by the state cooperative bank or state-controlled bank. They don't have any control on what the State Bank of India perhaps would have given to a farmer. For that, the center has to step in and take a decision. Let's hope that it doesn't happen, and let's hope that it happens along the lines that Bala is suggesting. Bala, thank you very much. If you would like to add anything to what we said, I'd like to give you the floor again.
Well, I think coming back to that last 3 lakh crores, I hope the government does build infrastructure. And see the benefits over 50 years, it will definitely add lots of money to the GDP. After 20 years, it will come back at 100% per annum. That is the benefit of an infrastructure which people don't realize.
That's fantastic, and I think, but it's a hard call because it will not, improve somebody's life tomorrow. Which is what it's like having, a sugary drink. It gives you a kick, but then the withdrawal symptoms are bad.
It doesn't give them immediate votes or staying power or posters to stick.
Yes. Thank you very much, Bala. We'll be back with more such hangouts.
Thank you. It's been a pleasure.
Mine too.